Good morning, students. Today we are going to see about the foreign direct investment, that is FDI. Foreign direct investment. In the name itself, we will clearly understand about the foreign direct investment. Investment is nothing but we are investing our money into some other business. Direct. So directly we are investing foreigners. So foreign direct investment. So foreigners are coming directly and they are investing their bonds and debentures and money everything into our Indian country. So foreign direct investment is the production in a country by a company is located in the another country, either by buying a company to the target country by expanding the operation of the existing business in the country. So foreign direct investment in the production or business, this is the purpose we are using the investment money in a country by whether it is an individual or a company to the another country, either by buying a company in a target country or expanding operations. Foreign direct investment is in the mainly thing is that foreign portfolio investment, which is the passive investment in the securities into the another country's stocks and bonds. If we talk about the advantage, that is benefits, that is pros for the foreign direct investment. So what are the benefits we are enjoying while the foreign countries are investing their money into our country? So inflow of equipments and technology. Definitely we will improve the new technology. Competitive advantages and innovation. Innovation is nothing but something new. So we have to introduce more number of new products, new ideas and new technology. Then finance resource of the expansive. Then employment generation. If we start one company, definitely we will give the employment opportunities to the educated person. Then contribution to the export growth and improved consumer welfare through reduced cost and provide access to the global market. We will link in the global level also. What are the disadvantages? If we talk about the advantages, some of the disadvantages will be there in the foreign direct investment. That is growing of a local industry. So they are destroying the local industry. Loss of control, effects on national environment, effects on culture. So what are the benefits we are enjoying under the foreign direct investment? So if we improve the foreign exchange position of the country, definitely the employment generation is also increasing in the production also. Then it helps the capital formation, helps the transfer of new technology, it helps to increase the export and increase the tax revenue. These are the benefits we are enjoying under the foreign direct investment. Why we need the foreign direct investment in our India? Improvement of economical infrastructure, because in our Indian country infrastructure in a poor condition. So in order to increase or in order to expand the infrastructure facility, we need foreign direct investment. Then technological upgradation. So we should not follow the old technology. So for example, in agriculture, so olden days and all laborers are using but nowadays machineries, we are plowing the grass one, we are using the machinery. So technological upgradation is also improved in the foreign direct investment. Then exploitation of the natural resources. We should not deplete our nature because we need the future generation. They also use the natural resources. Then scope of employment, improvement of export competitiveness and benefits of consumers. So these are the important needs for the foreign direct investment in India. Then what are the factors affecting the foreign direct investment? So many factors are affecting the foreign direct investment. One is political stability, then wage rate, tax rate, transport and infrastructure, size of the local market, commodities, access to free trade areas. So now we are shifting and we are moving to the foreign portfolio investment, that is FPI. So this is somewhat different from the foreign direct investment because all the shares and debentures are invest in the one of the country or one of the companies. Then foreign portfolio investment, this is defined by the foreign portfolio investment as buying and selling of the shares, it convertible into the debentures of the Indian companies, and it passive holding of the securities of the foreign stocks, bonds and other financial assets to issue the investors. So what are the factors affecting under the foreign portfolio investment in the sense? Tax rates, definitely the taxes will be affected for the foreign portfolio investment. Then interest rate, exchange rate, then personal income as a part of the capital account. BOP is nothing but balance of payment, whether we are following the favorable balance of payment and unfavorable balance of payment. So this is also the factors affecting the foreign portfolio investment. So these are the difference between foreign direct investment and foreign portfolio investment. So foreign direct investment is a long term investment and foreign portfolio it's a short term. And entry and exit is the difficult, but here we are freely entry and exit is possible. Foreign portfolio investment is eligible for capital gains only, but here profits of the company, particularly company is focusing on the foreign direct investment. So it does not tend to the speculative, but here no trends to be speculative. Okay, then flexible interest rate, here fixed interest rate. So these are the some of the difference between, that is distinguished between the foreign direct investment and foreign portfolio investment. Then now we are going to see about the foreign institutional investor. So what is the difference between foreign direct, foreign portfolio and foreign institutional? Shall we see? So foreign institutional investors, it means that institutions are establishing or incorporated outside India, that is foreign, that is NRI, which propose to make an investment in Indian securities. They are demanding, then it will denote the investors of the investment companies. They are not located in the tertiary of the country which they are investing. How foreign institutional investment, it started in our India. It opened the stock market of the foreign investors in the year September 1992. Since in the year 1993, it received the portfolio investment. Then it formed the foreign institutional investment in the equities. This has been one of the main character of the Indian foreigners. Then in order to improve the equity market, so SEBI, that is Security Exchange Board of India, it is introduced the foreign institutional investors. Why there is need in the foreign institutional investor? In the supplement and augmented are the domestic saving. So we want save more and we have to invest more, and without increasing foreign debt of the country, we will not able to improve the foreign institutional investors. So capital inflow to the equity market, it increases stock price lower to the cost of the equity capital, and it encourages the investment by India firms. So these are the important needs why we need the foreign institutional investors. So these are the registration process for the foreign pension, mutual fund, investment trust, bank, insurance, international and multinational organization, foundation. So these are the eligible registrations for the foreign institutional investors. Then advantages. What are the why we need? Why that is what are the advantages in the sense? Enhanced flow capital, managing uncertainty and controlling risk, improved corporate, then equity market, reduced cost, knowledge flows, improvements to market efficiency. Okay, thank you girls.